Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewington, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning. How are you?
Very well, thank you. All right, let's check in on Bitcoin. The CoinDesk Bitcoin price XVX index is trading at $56,462. Bitcoin is slightly down about 2.5% over the past 24 hours. The CoinDesk Ether price ETX index right now is at $4,525. ETH is also slightly down. Taking a look at the DFX CoinDesk's DeFi index right now is at $553. DeFi also slinking about 2.4% for the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk branch, which is globally as the leader in crypto news, events, and data. So we're seeing a bit of a market pullback. Lawrence, what is happening in the crypto markets?
Seinfeld market. It's a market about nothing right now. There's nothing interesting. No, really. I mean, if you look at the CoinDesk 20, the 20 assets that we follow, the largest assets in crypto, nothing is happening. It's like a 1, 2, 3, 4% drop in these guys. There are a couple in the DeFi space that are down 6 to 8%. But other than that, and that's over the past 24 hours, but other than that, I mean, really, you look at the volumes, you look at everything, it's just like, okay. There's no catalyst. There's nothing crazy happening right now. So, flip a coin. That's where it's going tomorrow.
In terms of crypto news, there is some really interesting developments in terms of Web 2 incumbents and how they're pivoting toward Web 3. And I'm talking about Square. They are changing their name, their corporate name, to Block. Sounds a lot like blockchain. That's effective on December 10th. And it's on the heels of Jack Dorsey's Twitter resignation as he focuses his time on his payments firm Square full time. So I think that's a pretty big deal, Emily.
It's a pretty big deal. If you've been following Jack and Square, it's not super surprising because, he's been invested in Bitcoin for a long time. His Twitter bio is literally Bitcoin. And also Square itself is very involved in the Bitcoin space. I think they hold about 5% of their cash reserves in Bitcoin. You can pay with Bitcoin on the Square Cash app. They're getting into Bitcoin mining. They're getting into decentralized finance. So this is more just formalizing something that's been going on for a while.
Yeah, Jack Dorsey's Square Crypto is rebranding itself to Spiral as well. They're saying that they're focused on making Bitcoin the planet's preferred currency. So certainly it's an interesting shift and an interesting way that we're seeing the reception of Jack Dorsey versus Mark Zuckerberg when Facebook changed their name to Meta, said they're going to dive into the metaverse. So there's a lot more skepticism and a lot more reception in terms of Jack Dorsey coming to the fray.
I think the best thing that happened when Facebook changed their name to Meta was Wendy's put out a tweet saying they're changing their names to Meat. People just don't like certain characters in tech, and Zuck seems to be one of them. Of course, Jack has a different reputation which he's cultivated. But interesting. Hey, guys, over at the Block Crypto, get your lawyers, call them up, find out what's going on. Maybe you have a trademark infringement. Just saying.
All right. Well, joining us now to discuss even further is Beth Kindig, founder and CEO at tech stock research firm IO Fund. Hello there, Beth. So, companies don't change their names lightly. What is the significance underlying this name change, in your view?
Yeah, thanks for having me. So I would say Square is technically the one to get disrupted by blockchain. They charge quite a few fees. They don't really cut back on credit card fees or merchant fees. The last time I had looked at it, I wrote an analysis about 1.5 years ago on why PayPal, Square, and a few of the others better figure something out because blockchain solves a lot of issues around transaction fees, and Square contributes to that. So I know that Jack Dorsey has one foot in the Bitcoin community and the blockchain community, but at the same time, I want to be really clear that the promise of decentralized finance and decentralized transactions is that all of the revenue that Square is making would be dispersed more evenly across, the shop owners or or the consumer. So to me, it's a defensive move. This is not a move coming from strength. And I would say the same about Facebook's Meta, and the same about Jack Dorsey stepping down from Twitter. From on my perspective, I think the minute a decentralized social media, blockchain company starts to attract a certain amount of monthly active users, it could potentially explode. There's just a lot of pain points around centralized social media. So if you look at some of the issues, whether it's antitrust in Europe, whether it's privacy issues left and right. I've been writing about privacy issues with Facebook since about 2014, so I follow that very closely. And in 2018, we hit a peak, Cambridge Analytica, and Twitter has a lot of the same issues, right? There's a lot of bots on Twitter. So I actually have also written about this with news articles and news sites. 60% of the activity is driven by bots. So we're all hanging out and spending a lot of time in these, on these online properties that could be greatly improved, and they can't be improved with the current structure today until that's invented. So that would be my 2 cents on it.
So where do we find crypto fitting in? Where do we find crypto fitting in the blocks market? The back end over at Block. Like, where is it going to fit in terms of? Do you see that the transactions getting more decentralized, so to speak, on their back end? Are they going to restructure a lot of the technology towards decentralized technologies and the like?
Yeah, I think it's really. I would say it's not super clear because on one hand, Jack Dorsey has said he's a Bitcoin maximalist to some extent. He's only been interested in Bitcoin, yet that probably is not the right token for mobile payments. Obviously, it's very scarce scalability. It's not very stable. There's a lot of stable coin tie-ins with Curve and things like that. So the backbone is what I'm saying is that I think there's a lot of room for a company like Curve, perhaps something that can be a market maker that's very stable or seeks stability. And that's the kind of technology that I think is probably a little more interesting to me.
So, Beth, what do you think is going to happen to Twitter? Do you think we're going to start seeing some really big changes? Is it going to become a very different product? What's your prediction?
It's always tough with a CEO change because as much as people may say the founder has run his or her course, the problem is that they also had the vision. And can Twitter grow from here? Can it improve from here? Like I said, there's a lot of bots on that site. And then if you're a new user, and you're trying to get on Twitter, it's very intimidating because the idea is that you have to have a certain number of followers in order to be important. Well, when you're brand new, that doesn't work very well. That's why Facebook had such massive adoption, is because, new user John Doe or Jane Doe gets on and they make all of these connections. And it doesn't really matter if you have 100 or 2,000 connections on Facebook. On Twitter, it matters quite a bit. People won't listen to you, and whatnot. So they've always had a user acquisition problem, if you will. How do you grow those users? And then on the other side of it, as an investor, I look at things very differently than a social media user might look at things. But as an investor, knowing that there's so many bots on the site, will advertisers really pay top dollar for that? So anytime an advertiser runs a campaign on Twitter, a good portion of that activity came from bots, and they could potentially be paying for that. I've seen campaigns have to pay for that. So you'll see 50,000 clicks, you'll see 0 conversions. Advertisers struggle there. So I'm just trying to say there's a lot of problems from an investor's standpoint today for Twitter. This is just my personal opinion. I look at this all day long. As you know, we specialize in tech stocks and we've specialized in crypto. I've covered it since 2013 and officially brought it to the stock market in 2019. But basically, I'm just trying to communicate here that there's a lot to be improved on, and can the CTO do it? That's a big question mark for sure, because the person with the vision is now stepping down. At the same time,
you have a crystal ball.
Yeah.
You say you have a crystal ball on tech stocks. So I'm wondering, when looking at Facebook, Twitter, and Square as they position themselves from Web 2 to Web 3.0, where do you see the best positioned companies in terms of their messaging, their direction. What are your thoughts?
For stocks or for crypto?
For stocks.
Yeah, so we are looking for large addressable markets that have been unmet. When I look at social media, a lot of that demand has been met. They have some serious disruptors coming on their heels from Web3. So social media is a tough one right now, I think, for stock investors. And it's interesting because you'll see some more traditional investors who really like it because the cash flow is there. The business makes sense to them. We are, I would say, moving into next year, we like semiconductors a lot. That really led our portfolio this year. We moved heavily into semiconductors in 2019, and that really came through for us this year. The whole world is changing in terms of how important semiconductors are. We do not believe they're cyclical anymore. Cloud is very resilient. And as you may have noticed, us tech stock investors are getting a little beat up in November. And I've been here many times. So one of the biggest sell-offs was Q3 2019. It came out of seemingly nowhere. It was a bigger sell-off than COVID, March 2020. Right now, we just reached such oversold levels that the Russell 2000 is more oversold right now than it was in March of 2020. Long story short, we stay with the product, we stay with the fundamentals, and we hold firm during these time periods because it's impossible to discount every single company and say that in these conditions, which is high inflation, CPI number came in high, that they won't perform. Cloud will perform, and it's because it drives down costs. So the minute we saw this in March of 2020 as well, when a CEO goes to look at their budget, they're going to cut certain things, and there's going to be some cloud products that do very well in that environment because they're saving a company a lot of money. So, work from home is a great trend like that.
Yeah, along those lines. I mean, you were talking about the fundamentals, and you've also said recently that PE ratios are going to matter this coming year, and that, of course, means that earnings are going to matter. Where do you see those earnings happening, particularly in the crypto space? And as well, do you have any pandemic plays now that the Omicron variant has become the tip of everyone's tongue right now? It didn't even matter a couple of weeks ago. But are there any pandemic plays along those lines that you might see, taking off in the next few weeks and months?
Right now, the market let me put it this way. The market was selling off about the variant. I guess I'll answer that one first. The market was selling off a month before we heard of the new variant. So is this market sell-off about the variant? I would argue it's about the inflation number coming in high. What is the Fed going to do? There's a lot of nervousness there. And one of the best things I feel we can do, and I can only speak for ourselves, everybody has to determine their own financial profile, is keep a large allocation to Bitcoin. Bitcoin is an amazing hedge for inflation. This is everything Bitcoin maximalists have been waiting for, is the United States to have some of this economic weakness, if you will, around inflation and all those trillions of dollars that we spent. When will that catch up to us? Bitcoin is the right hedge for that, and we've been pursuing that hedge for some time. Then these other these other quality tech stocks that do have earnings that are profitable. We've seen a big push. We always seem to see these pushes towards IPOs. They have very little financial history in the public markets. They have lockup expirations. Insiders can sell out, and they tend to do that when the lockup expires. So that's kind of I always consider it a little bit of a pump and dump because it gets pumped so hard, and then all of a sudden it's nowhere. Those are the kinds of stocks that are going to be too high beta to perform well moving forward. We had this big SPACs. SPACs were another bubble. Those are the kinds of companies that I would avoid at all costs when the word inflation is in the news. And bottom line is not been very important, to be honest with you. A lot of investors have forgotten about the bottom line. We are doubling down and making sure that the bottom line on every single one of our companies is strong right now.
Yeah, speaking of high inflation, also we got some jobless claims numbers for the week ending November 27th, totaling about 222,000 compared to, which is below analyst estimates of about 240,000 according to Dow Jones. All right, Beth, we got to wrap it there, but thank you so much. That was IO Fund founder and CEO Beth Kindig joining us for CoinDesk's Future of Money Week. All week long, CoinDesk and CDTV will feature thought leaders who share their opinions on the future of money and the emerging crypto economy. Coming up, checking in on Asia and a crypto markets update with Bitwise Asset Management.
Hey there, it's Zach Seward, co-host of The Hash and Deputy Global News Editor at CoinDesk. You're watching CoinDesk TV.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, December 2nd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, worries over the Omicron variant have seen wobbles across global markets, but how will the crypto market weather the storm? We're going to take a look at that question and a whole lot more coming up. Let's get you up to speed from Asia to the world. Kicking off with some of the top stories coming out of Asia today. First up, Qihoo 360, this is a Chinese internet company best known for its antivirus programs. Well, it's built a system that can help the Chinese government track crypto mining activity, which it banned, by the way. The company says it detected a daily average of 109,000 active mining IP addresses in November, and that the system can provide data including geographical location, network type, and connection frequency. Now, the company is not without controversy here. It was placed on the U.S. Bureau of Security and Industry's entity list in 2020, having been identified as representing a risk for supporting procurement of items for military end use. Meanwhile, in fundraising news, decentralized exchange aggregator 1inch Network has closed a $175 million Series B funding round. Led by Hong Kong-based Amber Group, other investors included VanEck, Alameda Research, Celsius, and the Gemini Frontier Fund, who bought the network's native 1inch token at a discounted price in the round. Now, you can find those stories and a whole lot more at forecast.news. Well, stock markets across the globe took a tumble as a new COVID variant, Omicron, was announced. There's fear that the world could grind to a halt once again as countries put up barriers. So what does this news mean for the new economy, powered by crypto? Let's bring in Michael Wu, CEO and founder of Amber Group, to find out. Great to see you again, Michael. How worried are you, Michael?
So I'm definitely worried about Omicron, but I'm less worried about the crypto market, to be honest. As we saw later on this week, crypto prices already started to recover. Ethereum is back to almost its historical high again. I think the virus or the ongoing pandemic definitely will continue to have impacts on global markets, including crypto.
And talking about Omicron, a little-known token by the same name has shot up after the virus emerged. At one point this week, it was up over 650%. And one popular crypto Twitter account tweeted, quote, "If this isn't a sign of a giant bubble, I don't know what is." What are your thoughts?
Well, I tend to disagree on that one. Something we have to understand is a lot of these less known or liquid tokens, they had very little liquidity to start with. So it really took probably one big buyer either mistakenly buying it for whatever reason or, trying to jack up the price. And it really wouldn't take much money to pull it up a few 100%.
Absolutely the future of the new economy here. Michael Wu, CEO and founder of Amber Group, thanks for joining us. Over in Japan, it looks like the digital yen idea is picking up steam. Japanese legislators are urging the central bank to pick up the pace on CBDC development. So will the Bank of Japan step up to the plate? Forecast News' Danny Park has more.
The BOJ began experimenting with CBDC back in April. but there are no plans to issue a digital yen just yet. Takayuki Kobayashi, the Minister for Economic Security, said the country needs to be ready to issue a digital yen, and that progress on CBDCs in other nations may impact Japan's national security. The speed of China's CBDC development could have prompted the statement, as it has already tested the digital currency in 10 major cities. But does the ECNY pose a threat to Japan?
Whichever country comes up with a good digital currency first, that's likely to be copied. And so it's rather like, you're setting out the ground rules for how these are going to work going forward.
Sullivan says China aims to push the US dollar out and make the digital renminbi the currency for Asia. For Forecast News, I'm Danny Park.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, what's Bitcoin up to? The CoinDesk Bitcoin price XVX index currently trading at $56,668. Bitcoin slightly down almost 3% over the past 24 hours. The CoinDesk Ether price ETX index at 4,544. ETH sliding down almost 3.7%. And the DFX CoinDesk DeFi index is also taking a step back, retreating about 2.5% for the day. Joining us now to discuss the crypto markets is Matt Hougan, Chief Investment Officer at crypto asset manager Bitwise. Hello there, Matt. Always a pleasure to have you. So give us your crypto markets outlook. Why are we seeing this retreat and how long will it last?
I love the description of this as the Seinfeld market with nothing going on. The caveat I would add to that is I think all of the news that matters right now in crypto is long-term news. I can speak from my perspective at Bitwise, and I'm sure this is true at other asset managers. The pace and intensity of due diligence meetings with leading institutional investors has never been higher right now. You're not seeing that institutional interest reflected yet in the market and the prices because that work takes place over months and even years. But I can say the intensity of institutional interest in Bitcoin, in Ethereum, in Solana, and other top assets is higher than I've ever seen it. And so that makes me bullish for the long term, even if during this sort of Seinfeld moment, you get these sideways or slightly down movements like we're seeing in the market today.
So, Matt, we did see this is the first month when we have a Bitcoin ETF that's based on the futures. And this is the first month that we're seeing its effects on the market. How much of an effect are they really having? Is it changing any part of the market dynamics? We saw just when the roll date came, when the expiration date came, there was a slight sell-off. So what happens? Is that really a factor, or was that just coincidental? I mean, are futures really playing in this month more than they ever have before?
I don't think they're playing in much more than they have before. The growth in the futures market has been a story that's been taking place over years. The ETF was a short-term peak in that. We saw $1 billion enter. That certainly has an impact on the market, but we're not seeing continual inflows to make that ETF or broader Bitcoin futures ETFs really systematically important. If that had continued to grow to be a $2 billion, a $5 billion, a $10 billion product, it may have started to impact the futures market more. But at $1 billion or so, I don't think it's having a huge impact. What it's doing, once again, is bringing more investors to look broadly at the asset class. I think a lot of investors have realized that a futures-based exposure is not the right exposure for long-term investors. And so they're pivoting to look at other ways of getting access. But the fact that an ETF exists has helped bring more institutions to the table. So no on the short-term impact of the futures market, but yes on the long-term trends of institutional investors moving in.
Good morning, Matt. One of the things we've been hearing a lot over the past week or so is this idea that, the demise of Bitcoin is a safe haven, right? Because we're seeing it crash with equities markets. We're seeing, people are really watching how Bitcoin is going to respond to fears over this new variant. What do you think about that? Is Bitcoin still viable as a safe haven?
Oh, I love this. I find this so funny. Traditional Wall Street spends 350 days a year telling us that Bitcoin is too risky to invest in. And then when we get a risk off moment in the market and Bitcoin sells off temporarily, they throw up their hands and say, oh, it doesn't work. It's either a risk asset or it's not. You can't be on both sides of the spectrum. We've seen this play out in the market for multiple years, and the story is always the same. Over acute, very short-term periods when there's a sharp risk-off sell-off in the broader market, yes, Bitcoin pulls back. But over long periods of time, it is the most effective hedge against long-term inflation and inflationary risks. It's a key part of sort of the risk-off element of your portfolio. Look, Bitcoin is down recently. It's up 90+% year to date. It's up 200% over the past 12 months. It's up 7,000% over the past 5 years. Does it sell off during short risk off markets? Absolutely, because it's a new disruptive technology and the whole market adjusts very rapidly. But pan out, we're investing in this for weeks, months, years, some people decades. That story still shows that it's a great place to hedge your portfolio against the largest risk that exists in the market right now, which is the risk of inflation in the US economy and other developed economies.
We see a lot of investors wanting to invest in Bitcoin. Fidelity just announced that they are launching a spot Bitcoin ETF in Canada, circumventing the United States. They're a $4 trillion asset manager. What was your reaction when you heard this news?
Well, that speaks to what I was talking about earlier, which is we had this spark of institutional interest in the crypto market that started a few years ago, really gained traction in 2010 and continues to accelerate. And the timelines that these institutional players play on take a long time. So Fidelity is now launching in Canada. We're still waiting for a spot Bitcoin ETF here in the US, but it's all inevitable. I see it as one more signal of the biggest story in crypto, which is this move of institutions and institutional investors into the space, which we talked about for a long time and just plays out on almost a geologic time frame. It plays out on a much longer time frame than crypto is used to, but the impact is significant. It's another signal also that we're going to get a spot Bitcoin ETF in the US eventually. It's not going to be 5 years from now. I think it's sooner than many people think. This is just another signal that we're moving in that direction.
So Matt, when you look at the DeFi market, we've had a small uptick over the past few days, but nonetheless, when you expand it out to a few weeks, it just seems relatively flat. What's going on? Why haven't we seen why didn't we see the kind of growth that we saw earlier in the year where DeFi just seemed to have exploded? Have we plateaued? And also, is that a stuffy behind you, or is that an actual puppy?
It's the cutest Doge in the world.
That is my own Doge. Yeah, it's 6 a.m, so that's Wrigley, my yellow lab. He's a sweet boy. Great question. I was looking at DeFi this morning. There's sort of a disconnect between the prices we're seeing for tokens like Uniswap and the activity we're seeing on those networks. I see continued sort of fundamental progress, particularly in DEXs, as that market continues to mature and grow in size, and still strength in areas like Maker and decent activity on Aave and others that just hasn't been reflected in the prices since earlier this year. I don't think we're necessarily at the end of that, but I see continued development activity, fundamental activity moving forward on the DeFi space. I suspect we'll have another sort of version of the DeFi summer at some point in the future. Is it January? Is it July of next year? Is it December of next year? I'm not sure. But the fundamental activity in the DeFi space hasn't slowed down. It's continued to grow. The VC funding into that space hasn't slowed down. It's continued to grow. It's just that token prices have been trading, slightly down for a meaningful period of time. Eventually, that will be an opportunity. I'm not sure what the catalyst will be. But as those prices go down, but the fundamental activity goes up, it starts to get more and more interesting. And eventually, those two things will lead to a different outcome.
All right, Matt. Well, thanks for your insights. And Wrigley, sorry to see Doge a bit down, almost 2% for the day. All right, that was Bitwise CEO Matt Hougan and Wrigley down there. All right, coming up, the future of money with the Cato Institute, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lynn.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Dorian Wayne.
I'm Nikhilesh Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi. You're watching.
And you are watching.
And you're watching CoinDesk TV.
All right, welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk, the State of Crypto newsletter. Good morning, Nick. So next week, big hearing. The House Financial Services Committee is talking with CEOs and several major crypto exchanges and startups. What's the preview you can give us?
Good morning. Yes, actually, this hearing is next Wednesday, and it will feature Circle CEO Jeremy Allaire, FTX CEO Sam Bankman-Fried, Brian Brooks, Chad Cascarilla, Danelle Dixon, and Elisa Haas from, a number of major crypto exchanges and startups in this industry. And so far, we don't have a committee memorandum, but an email announcing the hearing pointed to the Financial Services Committee's works and hearings around crypto so far, which have largely been, somewhat skeptical about the industry. They've, pointed to Libra hearings where lawmakers asked Facebook what they were doing, and hearings of that nature. So we don't know a lot yet, but it is poised to be a pretty interesting way to close out the year.
So Nick, one of the people not on that list, of course, is the CFO or CEO of Tether. That's like having a meeting about social media and not inviting Mark Zuckerberg. So why wasn't Tether invited? What was the problem there?
So I haven't heard a lot about how exactly this list came together. It does seem to be more focused on exchanges and platforms that are facilitating transactions rather than the issuers themselves. So even though Circle and Coinbase are both on this list, my understanding is they're on as parties that facilitate crypto transactions rather than as issuers of USDC.
All right, we'll certainly be monitoring that hearing big in the crypto industry. Thank you, Nick, for that update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
As part of the Future of Money Week, CoinDesk is featuring articles exploring the varied and sometimes weird ways value will move into the future. Our next guest applauds the private sector for inventing better alternatives to fiat currencies, and that market-based cryptocurrencies should be allowed to proliferate. Joining us now to discuss his article, Let the Market Come Up with Better Money Tech, is Jim Dorn, Senior Fellow at libertarian think tank Cato Institute. Hello there, Jim. So in your opinion, how has the U.S. fared in either helping or hindering better money?
Well, the U.S., of course, a lot different than China, where cryptocurrencies have already been banned, private cryptocurrencies. And the Fed's been very cautious in trying to introduce a digital currency itself, but I think they're on that path. They've been open to experimentation. Even 25 years ago, Alan Greenspan argued, to quote, the private sector needs flexibility to experiment without broad interference by the government. So I think that's the track to take. You need experimentation. The competition in the market process leads to discovery. And we're in a new frontier now with cryptocurrency and blockchain and DeFi and so on. And we need to leave those doors open. What we have now, we live in a fiat money world. So fundamentally, there's really no difference between the Fed printing out money and the private sector producing cryptocurrencies. They're all fiat money. So what you need institutions in which there is trust. That's why the yuan, for example, and even the digital yuan, they're not safe haven currencies. because people don't trust that system. So if you gain trust and you have algorithms that can limit the supply of a cryptocurrency, similar to Bitcoin, that has promise for the future. So we have to let markets, and especially a free market for ideas, operate so that people can experiment. At the same time, you need a genuine rule of law and a system to enforce contracts and to make sure that people aren't scammed by new deals. So there is room for regulation, but I think it should be a gentle regulation, a reasoned regulation, rather than an overreaction.
So, Jim, where do stablecoins fit in with all of this? They're based on fiat currency, and the free market, in many ways, has deemed them one for one because of their asset based. Yet, we don't really know for certain, in some cases, what's in that asset base. So, should regulators at least certify or say yes, what they say is in fact what it is? Or should that also be left to the free market to determine whether or not the stablecoin issuer is telling the truth?
Well, the market would eventually find out, obviously, when things fell through. But I think there is some room. It can reduce transactions costs and increase certainty by knowing what the stablecoins are backed by and if they're fully backed. So stablecoins are a step forward in this whole market process. And it's still kind of a new frontier, so there's going to be new developments that we can't foresee right now. But unless we allow for experimentation within a rule of law and within transparency, then we won't know whether these things work or not. Right now, I maybe disagree a little bit with some of the earlier panelists. What's been pushing the market for cyber currencies, in my opinion, is the search for yield. For the last 7 years, we've had even more. We've had close to zero interest rates, and now we have negative real rates of minus 5% or so. So Bitcoin, which doesn't have any yield itself per se, promises an investment for people that can't get yield anyplace else, and it's been a very good investment for a lot of people. But you can look at Bitcoin and these other assets. They're assets. They're not so much currencies as assets, speculative assets at this point. A currency is something, money in itself is something that's a widely accepted medium of exchange. These are not used as medium of exchanges yet, but that doesn't mean they couldn't be. So somebody has to figure out how to not only limit the supply, but also have a feedback mechanism built in so that the future value is stable. So if there is a large inflation in the United States with the official currency, we need a parallel system, a system of private currencies, now digital, which people can shift into. So I think that's going to be the key thing, how we develop these institutions and institutional trust and transparency so that people have this parallel system they can shift to. Because as you know, the government has a big network and the currency is a legal tender. So you have to overcome. There's going to be a lot of opposition to private currencies, I think, for that reason. The government has a monopoly on currency, and it doesn't want to have that monopoly basically tarnished or weakened or attenuated by competition. So they're going to do everything in their power to protect it. And I think there's no doubt in my mind that we'll have central bank digital currencies very soon. I mean, China's moving already in other countries, but that's a path of the future with the COVID virus and everything. People don't want to handle cash, so digital cash is the next step. But there's risks, of course, involved in central bank digital cash. You lose privacy. There's more centralization. It politicizes. It can politicize money. So we can avoid a lot of that actually by having a stable cyber currency in terms of stable coins or some other alternative that we don't even know about right now.
All right, Jim, we got to wrap it up there. But folks, read the article on CoinDesk.com about the Future of Money series. We got it all there. That was Cato Institute Senior Fellow Jim Dorn. Time now to check in with Crypto Twitter for our tweet of the day. This one from Anthony Scaramucci, founder of Skybridge Capital. Announcing new policy. When I get asked for money from political candidates, my first question is, what's your position on Bitcoin? And then my second question is, what's your position on Bitcoin? The midterms are coming. Let's support FOBs, friends of Bitcoin. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Luton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.